I'm a longtime institutional investor in hedge funds and private equity for over 30 years. I like to call myself a reformed hedge fund manager because I have seen the light. My wife had heard a podcast and she said, I think you should check into this thing called Bitcoin. I just dismissed it as like a drug deal to me. So I went around and asked all the technology analysts and the portfolio managers like about this Bitcoin thing. And every single one of them said the same thing. It's not really worth anything. It's super speculative. It's kind of a Ponzi scheme. So I ignored it again. And my son, who was in college, said, hey, Dad, you got to check out these cryptocurrencies. I think that there's something here. And it became abundantly clear rapidly to me that the only one that really had true value that you could trust was Bitcoin. The lightning bulb moment for me was Jeff Booth. He was on a podcast talking about the deflationary versus inflationary pressures of the economy. Bitcoin is a digital fortress and it's nation state level resistant. It's made me much, much, much more sympathetic and compassionate to those people around us who are not focused on investing and don't understand these things. I don't try to orange pill people so Bitcoin goes up. I try to orange pill people to save them from the system that's stealing from them every single day.
Welcome to Sat Chats, the Bitcoin podcast where we chat about sats. Sats are the smallest part of a Bitcoin, the same way pennies are the smallest part of a dollar. With Sat Chats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. So if you are brand new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot. In the studio today, I'm your host, Stuart Bitcoin Dad.
And I'm number 40, Anna Bevan, Chief of Stuff.
And in the virtual studio today, we have an absolute banger for all the Bitcoiners out there who know who they're looking at. For all of our pre-coiner friends, just strap in for the ride.
Hang on.
It's number 120, James Lavish. He came recommended to us from number 62, Jeff Booth.
Right.
So if you liked Jeff Booth, this is the guy that Jeff recommended to come on the show next. James, why don't you introduce yourself to our Satillionaires and then we'll jump into your Bitcoin story.
Yeah, so it's great to be here and good to see both of you. And I'm flattered and honored that Jeff suggested I come on the show. Jeff and I have been pretty good friends for the last few years now. So, so I appreciate that you trust him. But like you said, I'm James Lavish. For those of you who don't know me, I'm a longtime institutional investor in hedge funds and private equity for over 30 years now. Pains me to say it, but that's the reality. And but I've been on Wall Street in the hedge fund trenches for a long time, and I like to call myself a reformed hedge fund manager because I have seen the light. I've changed my mentality, my approach to investing over the course of the last 10 years in particular. And Bitcoin has been a central part of that, and understanding it and seeing money from a different lens has been transformational for me. So, and with that, I've started a hedge fund called the Bitcoin Opportunity Fund. I'm a co-managing partner there with David Foley, another institutional longtime hedge fund investment manager. And so we are all in on finding opportunity in this rapidly growing space. And so that's what we do now.
Let's go. All in on this rapidly growing space. He could be referring to either Bitcoin or Sat Chats.
Exactly.
Let's go. We are rapidly growing, we promise. And we want to rapidly grow to 10,000 subscribers before Christmas. So smash the subscribe if you're ready for James Lavish like you've never seen him before, okay, telling his Bitcoin story. And to say thanks for helping us get there, we will select one from among you at random and drop 2 million sats on your head.
It's going to be exciting.
James, what was it like for you before you found Bitcoin?
Well, I mean, I started my career on the floor of the New York Stock Exchange. Some of you already know this, that I traded something called ADR arbitrage. And what that was is we were just taking inefficiencies in the market and capturing them. And how we did that was there were foreign investors who wanted to trade stocks on the US stock exchange, or US investors who wanted to trade stocks on the London Stock Exchange. And so being a British investment bank and part of that a trading arm of part of that bank, we facilitated that. And what we did is, this is a long time ago, before actually Excel spreadsheets were a big thing. We were doing everything on simple, calculators on the floor, and you could translate these shares and create them on one exchange or break them down on another exchange. And all you had to do is calculate out how to do that with a basket and stamp tax and then the currency exchange. And there was always a difference between the two exchanges. And so that's kind of how I cut my teeth on Wall Street. And, you're just grabbing pennies and nickels along the way on thousands and thousands and thousands of trades. And so that was what we were doing. But that led me to go into hedge funds. Understanding that relationship on two sides of a trade was really important for something that's called merger arbitrage, which is betting on whether or not a merger will close. It's the same thing, where you're buying a security that's going to turn into something else. And if you buy this and short the right amount of this, you can capture the inefficiency. As long as the merger closes, you don't care about anything else. So to be honest, the beginning, you can see here the overall arching, philosophy of my investing at the time was capture inefficiencies in the market, not really caring what the market as a whole did. And in fact, if the market did crash, often these inefficiencies blew out and got bigger and bigger and just made more opportunity for us. So market crashes were actually good for opportunity for us. And one of the ones that I talk about there often is in 1998, when long-term capital management imploded because of taking on too much leverage and trying to capture teeny tiny inefficiencies in the bond markets and something called fixed income arbitrage, and levering those up 100 or more to 1, they got annihilated. Almost took down the entire financial world with them, because they were going to take down Goldman Sachs. And so, but when that happened, all the other hedge funds understood that this was happening, and they backed away from trades. They didn't go out there and dump them in the market, but they backed away from them. So the spreads blew out, and that was one of the best years that we ever had in hedge fund in my hedge fund career, because we took advantage of that. So here's that theme again, is that I don't really care where the market goes. I just want to make my inefficiencies and keep the market efficient. So what did we do? Was it good? Was it bad? I mean, we just provided liquidity for the market on both sides. And so if you wanted to get out of your shares of something that was going to be in a merger, we would happily buy them at a small discount and make the bet that merger was going to close and pay you for that. It'd be no different than you saying, well, I have this life insurance policy, but I don't really need it anymore for whatever reason. And so I'd like to just cash in on it. And somebody gives you, some pennies on the dollar for it, meaning maybe they give you 70 cents or 80 cents on the dollar for it. And, because you want that money now, and they're willing to wait until ultimately it pays out. So it's kind of the same concept, not to be morbid, but that's the same concept, where we just give liquidity to the market. So again, that theme is not really caring what the market did or where it went, unless it was a crash, and then we would have opportunity. Now you fast forward, and I started working with a different type of fund, a private equity, long-term investment style, deep value, small microcap investment style fund, which was very long leaning. We had the ability to short to hedge risks, but it's very long leaning. And this is where I really started to embrace. This is when I was over at a place called Luther King Capital Management. We had a hedge fund unit inside there. And so that's where I really started to truly understand market dynamics, how macroeconomics play into the markets, and how important it was to position yourself for long-term value and growth in your investments. Again, though, still at this time, it was just not a game, but a challenge to maximize profit and maximize your earnings and the growth of your capital. But it wasn't quite as crystal clear to me the reason, the true underlying reason for that, and just how important it was to grow your capital that you have put away, rather than just put it in cash and let it accumulate in interest payments along the way. But then we had something called ZIRP. And for those who don't know what that is, it's zero interest rate policy. And so the Fed took down interest rates after the great financial crisis down to zero, basically, and so there was no money to be made if you're sitting in cash. You had to start going out on the risk curve to protect your wealth. And that's the key word right there, protect. And so over the course of the last decade of my career, the challenge of accumulating profits from inefficiency morphed into the challenge of protecting wealth. And by the time I found Bitcoin, that's where it all solidified and really became crystal clear for me about why Bitcoin is so important, why it really why it makes sense today, and how valuable it is as an asset, and really that value comes from the network. But that's kind of my arc, the arc of my career and how I got here in a big picture.
It's fascinating business, because it sounds like you started off as a young gun willing to grab inefficiencies between markets. And you're in a position to translate something from the United States into something from the United Kingdom. Mm-hmm. They both have their own nation state paper, slips of currency type. It just, there's kind of an arbitrary difference between the two, but you almost kind of, you moved from capturing inefficiencies in the marketplace into, I guess, making longer term investments that are focused on deep value. And, your initial gains in wealth, where you're grabbing this inefficiency, you end up being presented with a problem, which is, now that you have wealth, there's inefficiency locked up in the form of money that you are using itself. Mm-hmm. And if I have money in a savings account and you can get more for 0%, then it's like the money in my account isn't really doing anything. And you're saying that you're like, you know what? I need to find a way to protect my wealth, because it's not going to be making any money if it's just sitting in an account as money. So
yeah, it was a pretty simple equation for us. It was more, it came down to, if you could borrow at near zero rates, 2, 3, 4%, as a normal person, and then we were able to borrow at 2 or 3% personally, and then turn around and invest that in markets or assets at the same time that the money supply was growing at nearly 7%. That's a 5% arbitrage right there, because you're basically saying, well, I can borrow at 2%, and I can go invest it, and the benchmark for the investment was it's the expansion of the money supply. So if your investments are growing just at the rate of the money supply, then you're making 7%. So why would you pay down your mortgage? Why would you do that? You wouldn't. You would keep that cash invested in these markets that are expanding. Meaning, and this is the part that normal people, meaning people who are not deep into this concept, Stuart, this is where it kind of blows their mind when I walk people through this. When you ask somebody, is inflation normal? They say, of course, 2 or 3% that's normal. You need that. If you don't have that, then people won't spend their money and the economy won't grow. And that's the exact wrong answer. It's just something we've been conditioned to. We've been conditioned to believe that. It's not true. The only reason that we have inflation is because of manipulation of money. And so, one of the concepts that is very difficult for people to understand is that their house is not becoming worth more. their investments are not becoming worth more. I mean, even they may be becoming something like gold is not becoming worth more. Okay, an asset investment or a painting on the wall. What's happening is that the dollar that it's being weighed against, it's being priced in, is becoming worth less. So if you just look at a chart of the purchasing power of the dollar over the last 100 years, it's down 96%. And it's really in the last 5 years, just the last 5 years, it's down 25%, the purchasing power of the dollar. And that's as much as they admit to. That's the government's calculation of inflation, of CPI, which we all know is flawed, and it underestimates the amount of true inflation that's out there. But that's what happens to your dollar when it's sitting in the bank. If you had $100 sitting in the bank in 2020 and you didn't touch it, today it can purchase $75 worth of goods. That's insidious. And that's the problem because of the manipulation of the money. And when you can get a typical person who's not in finance, who's not a mathematician, you can get their head around that, then it kind of blows their mind. They're like, whoa, wait a minute. When people understand that, they get to the realization, oh my God, I've got to protect my money. And that's where Bitcoin comes in.
When you talk about Bitcoin, when did Bitcoin come into your life? Where were you when you first heard about it, and how did it make you feel to discover it?
The reality is I heard about it a bunch of times. My wife had heard a podcast. It was a Tim Ferriss podcast. They were talking about this thing called Bitcoin. She said, I think you should check into this. This is back in about 2015. Okay. And I was just like, back then in 2015, it wasn't easy to buy it. So you had to you likely know this, obviously, but you had to take cash and go to meet somebody and get this thing called Bitcoin on a little thumb drive. And it's like, that's just whatever. That sounds like a drug deal to me. And so I just dismissed it as this is not something that is trustworthy. Because look, I was on Wall Street. I was in that world of hedge funds and being focused on this is how you invest. That just is something that's crazy. Flash forward to about 2018, and you had Bitcoin had gone from all the way from 20,000, and it crashed all the way back down to what was it, 3,500, right? Somewhere around there, about 3,500. And this is back in the end of 2018, beginning of 2019. Well, here's what happened is I had some discretionary capital that I wanted to invest. And, because I had hedge fund investments, I had stocks, I had my 401k, all that stuff. And I wanted to do something a little bit different. I wanted to go out on the risk curve a little bit. And so I heard, and I circled back to this Bitcoin thing. I said, there's something here. I feel like there's something here with these digital currencies. So I went around and asked all the analysts on the street that I knew, the technology analysts and the portfolio managers, like about this Bitcoin thing. And every single one of them said the same thing. Oh, it's just, it's not really worth anything. It's super speculative. That doesn't have any underlying value. It's kind of a Ponzi scheme. So it's a trade. If it's not worth anything, it's going to end up at zero someday. I was like, oh, wow. Thank you for saving me from that when it was at $3,500. And so I ignored it again. So 2 strikes, right? So 2 strikes against me. So, and then the pandemic came, and, I was living in 2 cities, and I left Texas to go to Nevada and live full time in Nevada. And so I was unwinding from my position at the hedge fund in Fort Worth, and I didn't know what I was going to do. And my son, who was in college, said, "Hey, Dad, I think you ought to check out these cryptocurrencies. I think that there's something here for you." I was like, God, this thing is not going away. And so I went in and did your typical, bought some Ethereum and Cardano and Bitcoin and Solana, and kind of try to figure out this landscape. And it became abundantly clear rapidly to me that the only one that really had true value that you could trust was Bitcoin. And understanding that was what got me over the hump. So just really the understanding of it is what got me to move all of my assets or all of the investments I had in the other protocols and straight into Bitcoin, and then just continue to study Bitcoin from there. And that was really the lightning bulb moment for me, as many people know, was Jeff Booth. He was on a podcast with Pomp, and they were talking about the deflationary versus inflationary pressures of the economy. You've got technology that's very deflationary, and the more that technology advances, the less expensive each unit of productivity should become. And that's true. If you think about it, you stop and just think about it. The more technology we have, the less money it costs to plow a field, make a car, create a product, distribute a product. But on the other side, you've got this insidious force, which is the manipulation of money and manipulation of the monetary supply. Why is that? Well, back in 1971, President Nixon took us fully off the gold standard and said that the dollar would no longer be, it would no longer be redeemable for gold. And so it was just going to be a piece of paper that's backed by the US government. It became fiat currency. And so what happened then? And we started running deficits that have been a nonstop, just perpetual force in our financial system since then. Then we just borrow and 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 borrow more. And we borrow so much that we have to borrow to pay the interest on our borrowing, our past borrowing. And so this is called the debt. This is the debt spiral that we're in. I've written a lot about on my newsletters. And so because of this, to come full circle, you realize that, they have to expand the money supply. So the manipulation of money is they have to expand the money supply in order to make more dollars, to have more dollars to pay down that old debt. And so what you're doing is you're paying down this debt with cheaper dollars. And that's the monetary manipulation force. So you've got the force of deflation through technology and the force of monetary manipulation over here, which needs more dollars. That's kind of what set it off for me. That said, oh my God, we need an asset that can't be manipulated, that can't be inflated, and something like gold. But gold has so much paper around it that we've seen a lot of manipulation in gold markets over the years, that unless you hold physical gold, which is not easy to do. I mean, you're going to buy it. You have to buy it from somebody you trust. They send it to you. Then you got to put it in a safe, and you've got to manage it. And then if you wanted to use it, what do you do with it? Like, there's so many problems with gold as a store of value in today's world. It's not like back in the medieval times where you just take out, a quarter ounce of gold and buy the goods and services you want. And now you're talking about having to walk around with gold. It's not, you can't use it as a means of exchange, really. I mean, you could, but it's clunky, super clunky. So you need something different. And that's where Bitcoin came in. And I realized that understanding Bitcoin was the key to just understanding how it works and why it is so safe as an instrument and a store of value and a protocol. That's really what got me over the hump. So when we were talking, when I started doing my research, really digging into it, I realized that, you hear these terms. It's decentralized, it's immutable, it's highly divisible, it's highly portable, and it's the ultra scarce asset of the world. And you hear all of those things, and I mean, that's confusing. It's intimidating to people. They're like, I don't understand what any of that means. To a typical normal person who's just going about their day, they're a nurse or a fireman, or they're a lawyer or a doctor or an administrator. They're like, I just stop stealing from me. I just want the government to stop stealing from me through inflation and tax, please. And and then you come to something like Bitcoin, you say, well, you need Bitcoin. And why? Well, because it's decentralized and immutable. It's highly divisible. It's portable. It's scarce. And they're like, wait, what? I've been told it was for drug dealers, for human traffickers, for illegal activity. That you're lying to me. I hear it every day in the news and in the papers. It's for bad people. So it's kind of these are concepts though that are not really that difficult to understand if you just slow down, step back, and hear what each of them mean. And so when you speak about these things, you say, okay, let's break them apart. Okay. First, Bitcoin's decentralized. Well, what does that mean? Well, Bitcoin is governed, it's governed by code that's run on tens of thousands of nodes across the world. It's fully distributed. So no one person is in control of it. There's no CEO, there's no board of directors, there's nobody in control of it. It's governed by the nodes and the miners, right? So there's no central authority. The second thing is, you talk about Bitcoin being immutable. What does that mean? Well, basically it means that Bitcoin is secured by the most powerful computer network that spans the entire world, and it's rapidly growing stronger, and it takes a tremendous amount of computer power to do that. The network, because of that, the network its energy consumption is 180 terawatt hours per year. So for the people who are not engineers or electricians, that's the equivalent. That's equivalent to 21 full-scale nuclear reactors running continuously 24/7. Just think about that. Okay, so that's what protects the network from being attacked or compromised. It's more energy than Ireland, Denmark, Greece, Portugal, Hungary, the Czech Republic, Belgium, Finland, Austria, and many others. I mean, it's more energy than each of those. And it's been running continuously 24/7 for 11 years. It got interrupted once in 2013 for 10 minutes, but it's been running actually 12 years now, continuously without a hiccup. So it's, to put it simply, and I like to say that Bitcoin is a digital fortress and it's nation state level resistant. And that's how strong it is. So that's what immutable means. Okay. So that's why it's immutable. It's highly divisible too. Meaning, so when people say, yeah, but there's only going to be 21 million of them. Right. So there's only going to be 21 million of them, then it's not enough for the world. Well, okay. Imagine you had 21 million US dollars. That could be, each of them had 100 million pennies. That's what Bitcoin is. Each Bitcoin can be divided 100 million times. Imagine taking a bar of gold and dividing it 100 million times. That's what you're talking about here. And it's super simple, and they're called Satoshis. They're sats. And that's why, I love the name of your show. And then you talk about it being portable, right? Well, it can be taken anywhere, but it's not really being taken anywhere. You guys have seen the videos of people who have been stopped at the border of hostile countries that they're trying to escape, whether it be a Venezuela or a Brazil or Egypt or something. And they have a suitcase of money, or they have some gold. What happens? It gets seized at the border. It just gets taken, or they may even get arrested for it, However, if they took all that money and put it into Bitcoin, they could walk across the border with nothing but the shirt on their back. And when they get to the country they're going to, they would have Bitcoin sitting there waiting for them. They didn't carry it. They just have to know those 12 or 24 words in their head, that seed phrase, which is their key to unlock it. So, and then, because it's scarce, because there's only 21 million that's ever going to be made, that are ever going to be mined, it's a pretty simple equation. You just do the math. There's over 60 million millionaires in the world. If every single one of them wanted a Bitcoin, they couldn't have it. There's not enough to go around for them to have a full Bitcoin. That means they can only have a third of a Bitcoin. So if you believe in Bitcoin, and when you get to the spot where you truly believe in it, and you understand that it is impenetrable, it's immutable, it is nation state level resistant, and that it is the ultimate digital gold. Once you get to that point, then just do this math. You have a full Bitcoin, you'll be one of the richest people in the world eventually. And that's just reality, because Bitcoin cannot be debased like fiat currencies. It will hold its value against the debasement of currency around it. And that's why, for me, it's truly important to hold on to long term, to have a long term vision with it. That's really where my head was at over the course of my journey of 2020, 2021, 2022.
What is it like for you now that you've gone through your wealth creation journey? Your wealth preservation journey eventually leads you to Bitcoin. You go through all these different aspects of Bitcoin to go, wow. I mean, anywhere I look at this thing, it is the best version of that thing. I'm going to adopt this for the long term. What is your life like now that you have stacked some sats?
Yeah. Well, it's changed dramatically from where it was before. So just the ability to have to create an investment business around Bitcoin it's been a tremendous, tremendously positive change in my life. And so that's one thing. But what you're talking about here is I see the same sort of arbitrage. What I'm talking about when I talk about arbitrage of Bitcoin is that there is an inefficiency of what Bitcoin is really worth today and where it's trading, meaning how much it costs to buy a Bitcoin today. And so what has changed for me is the way I think about every single thing around me and what its value is, and whether it's rapidly depreciating in value like a car, or it's rapidly being debased, meaning your home. So what it's changed for me in my daily life is just the mentality of how everything is valued around us. And really, to be truthful, it's made me much, much, much more sympathetic and compassionate to those people around us who are not focused on investing and don't understand these things. It's made me confront my past life of being an investment manager for an institution. It's made me admit that the system that I was benefiting from is predatory, and it's not okay. And so it's changed how I interact with everybody every single day. And I don't try to orange pill people so Bitcoin goes up. I try to orange pill people to save them from the system that's insidiously stealing from them every single day. And so I just want them to understand that you've got to own something. Own some gold. That's great. Buy a little bit of Bitcoin, protect yourself, because this is not stopping. It's only getting worse. It's only accelerating. And the next time we have a market crash, we have another black swan. They printed almost $5 trillion in the last financial crisis during COVID. It's about 5 times what they printed in the great financial crisis. What do you think is going to happen the next time? The dollar's not going to debase by 25% over 5 years. It's going to debase by 50%. They're going to print so much money. It's going to shock people. And they have to. They don't really have a choice because of all the debt that we talked about. It's just math. They have to keep this charade going. And so it's made me more understanding of the normal person that is just getting through life and trying to survive. And now we're in a situation where, when I was a kid, my mom worked as a nurse because we were middle class, firmly middle class at best. My dad was a very smart guy, nuclear engineer, but never, didn't make big salaries, not like, you can today. And she worked, but it was she was one of the handful of people around us who we were dual income family was kind of like, wow, you got dual income. Okay. Most people didn't have to. Is back in the 70s and early 80s. Now you flash forward to today, and if you don't have a two income family, you're likely either super wealthy or struggling beyond belief, and because someone is unemployed or unemployable for some reason. And so you need it, and it's not keeping it. You're not keeping up. Your wages are not keeping up. And so you're feeling this pressure. Why are you feeling that? Well, it's something called the Cantillon effect. Those who are closest to the money spigot benefit the most. And we see it here in our system with the banks, the investors, Wall Street, congressmen, senators who have ability to use it, in a way that enriches them. So those who are closest to it, they benefit the most. And what happens is, you've seen this over the course of the last, since 1971, you see the difference in the expansion of wealth for the top 10% versus the bottom 50%, and it is rapidly grown, that dispersion. So we now look more like a Latin American country. Back at Yale, when I was an undergraduate, I took a class, and it was an economics class studying the rapid difference in wealth between lower and upper demographics of Latin American countries. That's what we look like now. We look like an emerging market because we've become that. The problem here is that we're not taught these things. We're just not taught about money properly in grade school, middle school, high school and college, even people who are MBAs. So I write this newsletter. It's called The Informationist. And every week I take one of these concepts that are really difficult to understand, and break it down super simply. And you guys would not believe the number of comments that I get and emails I get. They're like, I have an MBA. I had an MBA. I got an MBA from this place, and they never taught us this. This is insane that I have an MBA and I wasn't taught this. Well, of course you weren't. There's no incentive for this system to tell everybody how they're cheating you. There's no incentive for it. So of course they're not going to put it in textbooks, and they're not going to put it in college courses. By and large, a lot of the professors and economists, they're so brainwashed into this modern monetary theory concept that they don't understand Austrian economics, which is that there's going to be the rapid debasement of the money supply is insidious, and so they're just not taught this. So that's a really long way of saying, Stuart, that I've become much more compassionate and much more interested in teaching people how to save themselves from the system than I was just a few years ago. And that's actually been a really powerful and important change for me personally. And I truly love helping people understand it.
Well, it's clear after speaking to you, James, that there is more to Bitcoin than we will ever fit into a single chat about SAT. So we do ask each of our guests if they'd be willing to come back on in 9 months to give us an update on their Bitcoin baby. Would you be willing to do that for us, James?
Absolutely. I would love to.
Let's go. So let's recap this conversation with James today. It started off on Wall Street, capturing and benefiting from a system that was not fair for the everyday individual. Super smart. But once you benefited from that system enough through your intelligence, through your hard work, through your understanding of that financial system, you almost hit an inflection point where you now needed to protect yourself from the same system that you had benefited from, which is wild to think about. So you set about learning more, and it was almost like the universe was trying to get in touch with you. Your wife was like, hey, check this out. Somebody on the Tim Ferriss podcast talked about Bitcoin. You should check it out. You're like, nah, I don't know about that. Your son rolled up later during the pandemic. Hey, Dad. Hey, old pops. You should check this thing out. And you basically decided, okay. I get it. Let me step into the wider world of cryptocurrency. And this will be neat. This will need to be something that we unpack when you come back on 9 months, which is how did you realize so quickly that everything except for Bitcoin was not worth your time?
Right.
That's something I want to unpack in 9 months for sure, because you bought Ethereum. You know, you said, listen, Vitalik, what's up? Let me grab some of your coins. Solana, Cardano, you name it. Could have been Fartcoin in there somewhere. We're not sure just how many cryptos James was interested in, but he eventually said, never mind. Let me get rid of all that. Just like number 108 JC, when he met his girlfriend who would become his wife, he said, give me your smartphone. He found all the crypto on it, liquidated it into Bitcoin, and said, okay, I just did you a big favor. You know, since I care about you as my girlfriend, let me get you on the right path.
Right.
You did the same thing for yourself. And over the past couple of years, not only have you built an opportunity fund around Bitcoin now, but also you have changed as a human being and become more compassionate to each and every individual who is being exploited through this system, where if you are rich, it is easier to get richer. If you are close to the money, hey, I'll take that money at 2%, and then I'll lend it to you through the form of a credit card that charges 20%, because your $100 is now only getting you $75 worth of stuff, and you're not making a ton of money, and everything's getting more expensive all the time. So really interesting to hear that journey of making money in the system, protecting yourself from the system, and ultimately realizing that we need to help more people do the same thing. And it sounds like the digital fortress protected by 21 nuclear reactors worth of power is the correct choice if you would like to be safe in today's world. Go ahead and get inside the crenellated walls of Bitcoin. Okay. So absolutely incredible.
Yeah.
Anna Bevan's like, what does crenellated mean?
I did have that thought. Thank you.
Yeah. James, crenellated, what do you got for us? Do you know what a crenellation is? Pop quiz.
I do not. Educate me, please.
All right. And for everybody listening, this could show up on Friday. So, James, on Friday, we have our live game show, TikTok Next Block, the live game show where you play for 1 million sats. And the trivia just gets harder and harder as you go up. For everybody listening, a crenellation is that pattern on the top of the castle fortress that pops up and down and basically makes a square of space and a square of blank space, a square of space, so that your archer can stand, draw the bow, pop it, and come behind the wall again. So that crenellation along the top is that prototypical tower design in a castle.
Oh, that's so cool, because I definitely was going to like crinoline, which is under a skirt to make it floofy. That was not it. Not even close.
But if Bitcoin had...
Not even close.
If Bitcoin had an underskirt, it would be poofy, okay?
For sure.
So let's go. All right, now let's take a break for Ithaca Hummus, and then we're going to make James an offer in exchange for all the value that he brought to us today.
Yeah, so James, our founding sponsor is Ithaca Hummus. Have you ever had any Ithaca Hummus? Are you familiar?
I have not had Ithaca hummus, but I have had plenty of hummus. Yeah.
Well, this is going to be a hummus that you're going to definitely have to try. Ithaca Hummus is made with all the freshest ingredients, and we are privileged to be able to have it every day on every show and to have as our founding sponsor. And so this flavor for today is an everything bagel flavor. And so Stuart and I...
it tastes just like all the little bits on top of the bagel.
All the little bits. Stuart and I are going to act as your taste buds today.
Let's go. Fat glob.
Fat glob. I like to have
that. Is this Ithaca? Is it in Ithaca, New York? Is that why it's called Ithaca?
It got its start up there.
Yep.
So, our co-founder here, Chris, is the CEO of Ithaca Hummus, and he got his start making it himself and packing it into deli cups.
Yep.
And I think he used his wife's
ice cream scoops.
I think he used his wife's hair dryer to like shrink wrap the top of it, and he would take it to farmers markets. And it's grown to be nationwide. It should be in all the grocery stores around you out there in Arizona. Yep. I mean, once you taste Ithaca hummus, you don't get any other hummus.
There's no other hummus.
You just don't do it.
No, you taste all the ingredients, every single one.
So good. All right.
Okay.
Cheers, James. Man, that's good today.
Yeah. It's super fresh, very like literally everything but the bagel. Like perfectly named, salty.
So good.
Yeah, lemony.
The mouthfeel is on point. And it
y'all make me hungry.
I'm telling you. Hey, look. James, next time you go to the grocery store, get some Ithaca hummus, try some of it, come back to the comments of this video, and let the people know what your experience was. All right, let's make James an offer here.
Perfect. Okay, James, on Sat Chats, we believe in value for value. And so in exchange for your time on this show, we would like to give you an offer to choose between $50 in fiat or its equivalent in Bitcoin, which is 42,850 Satoshis. What would you like to choose?
I would love to take the Satoshis, and then, but what I'd like you to do is go ahead and give it to someone in the comments who makes the best comment on this video. So you guys do that.
Oh, dang.
That's a first.
Let's go.
Yes.
I love that. Okay, so Satillionaires, give us the best comment on this video on YouTube, and we will drop.
If you made it this far, you definitely deserve some
exactly.
Stats. True. Dude, these days, James, they click on the video, and within 3 seconds, they're like, next app on my phone. I can't even. You cannot sit still in today's world.
No, high five.
All right, James, you bring our show's scoreboard to 114 guests who have stacked the sats, along with 9 who need a little bit more time. So 42,850 Satoshis to whoever leaves the best of all possible comments. James, if our Satillionaires really enjoyed your episode, which I know they did, and they want to engage with you online, they want to grab your newsletter, they might want to check out your opportunity fund, where do you want our Satillionaires to go?
Yeah. So I'm on Twitter at James Lavish. Just make sure you get the one that's got the badge, because there's lots of clones of me that are, trying to trick you. So be careful of that. But and then my newsletter is just jameslavish.com. It's called The Informationist. It's on Substack. There's a free version, there's a paid version, but the free version, you get one free newsletter every single month, and it'll teach you something, I promise. And then of course, the Bitcoin Opportunity Fund. If you're an accredited investor, just go and put your name in a little email request from the Bitcoin Opportunity. It's just bitcoinopportunity.fund, and we'd be happy to jump on the phone with you and determine whether or not that would be right for you, whether it's an appropriate part of your portfolio. So, but yeah, and that's it. It's fast growing. We're doing great, and we're really we have tremendous confidence in Bitcoin and the Bitcoin universe, and so we're super excited about the future there.
Well, awesome. we will put all that in our show notes so that folks don't go to James Lorvish on Twitter. We want them to get to James Lavish. Okay, no clones. Exactly. So, Satillionaires, if you enjoyed today's episode, if you can see that number 40 Anna Bevan and I are in here every single day doing Satoshi's work, orange pilling the world by trying to place $50 worth of Satoshis into 8.24 billion people's wallets worldwide. Okay, the single most powerful move you can make right now to help us is to subscribe to to Sat Chats here on YouTube. We are trying to reach 10,000 subscribers by Christmas. We want to put that underneath our Yuletide tree. And to thank you for helping us get there, we will select one from among you at random and drop 2 million sats on your head. If you want to come on this show and tell us your Bitcoin story or get your Bitcoin questions answered, if you want to play our game on Fridays, TikTok Next Block, if you want to sponsor the show because you believe in what we're doing, you can go to satchats.com and there's 3 big buttons for you to choose from. You can also hit our show notes for information on how to support us with your Bitcoin. We will take all of it and drive it into the next brand new Bitcoiner. And I just did the math recently. If I'm going to put $50 into every single person's wallets on Earth, then I need 3,572,040 Bitcoin. All right. Mm-hmm. So send it to me and I will forward it along to you like the chain, the emails from the 90s where it's like, if you don't send this to 10 people, do you remember those? What were those called? Chain letters?
Yeah, they were terrible.
Amazing.
I never did it.
All right. All right. So we're on YouTube 5 days a week at 11 a.m. Check us out. Remember, Sat Chats is for educational purposes and should not be construed as financial advice. Also, our guests' views are their own. Until next time, keep stacking those sats.